Hi, I'm Dhammika. In this presentation, I'm going to talk about material on site and how the payment is made for material on site. Basically, in this presentation, I'm going to focus about why the provision is there in the contracts and how the FIDIC forms of contract has given the provisions for paying this material on site. While working for the contractors as well as consultants, we have to deal with this material on site payment. During my experience, as well as in my APC interviews, I have seen many people do not understand the meaning of material on site and the reason behind it. Therefore, in this presentation, we will see why the provision is there and we will go through the different FIDIC forms of contracts. Now, let's see why we have this provision in your contracts. The simple answer is to provide a financial support to the contractor. Many people do not understand the importance of paying for the materials. They see this as an unnecessary burden to clients, as the contractor is anyhow going to get the money as the construction progresses. Further, they think that the contractor has to use his advance for cover this and the contractor should bear the financial risk. But that is completely wrong. Let's see why. Let's see why it's not good to ask contractor to bear the risk. It is important to note that we do not want contractor to mix up his project finance with his other business. In short, he should be able to complete the project with client's money. It is important to keep in mind that the contractor could be a new entity and this could be his first job. Therefore, it is wise to pay for the material on site to maintain his cash flow. There is no harm of paying it as the amount will be deducted from his payments once the materials are fixed. On the other hand, client is the person who has arranged money and available for the payment. Then why not the contractor use his advance payment? Well, the advance payment is given for mobilization. That's why sometimes it refers as mobilization advance. Generally, if you check the mobilization cost and the contractor's expenses until he gets his first payment, you will realize that the advance payment amount is almost similar to that cost. Therefore, it is important to remember a contractor with a healthy cash flow is the key to a project success. Now, let's see who owns those goods. Is it the supplier who has not been get paid, or the subcontractor who is storing the goods off-site, or the contractor who is storing the goods on the site, or the employer who is the owner of the building where the materials are going to be fixed? The first point to establish is whether the materials have been fixed. If so, the title of the materials will pass to the landowner. Another important thing to remember is landowner is not always the employer. However, this is called as the quick quit plantage rule. Then what about the unfixed materials but laying on site? It will depend on these situations. First one, paid on good faith but no retention of title. This has to deal with the law applicable to contract. An example is if a supplier supplied materials to a contractor who has not paid for them and the materials are on the site. The employer paid the contractor for materials, but he became insolvent without paying the supplier. In such a situation, if the employer has paid for them in good faith and did not have a notice of title clause in the contract, the title of the materials will pass to the employer. and he will not have to pay to the supplier again. A similar scenario has explained in the case of Archivent Sales and Developments Limited versus Strathclyde RC. Second point is with retention of title contracts. When we deal with materials on site, first thing we have to do is to check the contract to see whether there is a contract clause related to the title of goods as well as to the retention of title. If it is available, then there is no question about the ownership of the materials. Now let's see what standard form of contracts says about material on site payment. In traditional type of contracts, we will discuss about FIDIC 99 and FIDIC 2017 versions. FIDIC 99 read and designed and built both, and 2017 version subclause 1.1.53 has given the definition for the materials. It says materials means things of all kinds other than plant intended to form or forming part of the permanent works, including the supply only materials, if any, to be supplied by the contractor under the contract. Subclause 7.7 Ownership of plant and materials. Each item of plant and materials shall, to the extent consistent with the laws of the country, become the property of the employer at whichever is the earlier of the following times, free from liens and other encumbrances. A. When it is delivered to the site. In both FIDIC 99 and 2017 and design and build versions, this subclause 7.7 is also similar. And another important thing is to remember is materials shipped or en route to site may not become the employer's property until the time defined in subclause 7.7, which is when it is delivered to the site. So, before it is delivered to the site, it is not belongs to the employer, because the ownership of plant and materials as per the clause 7.7 is given the time as when it is delivered to the site. Subclause 14.5 Plant and materials intended for the works. This is FIDIC 99, and we will discuss FIDIC 2017 and FIDIC 87 later, because FIDIC 99 version and FIDIC 2017 version has slight difference in this subclause. If this subclause applies, interim payment certificates shall include, under subparagraph E of subclause 14.3, 1. An amount for plant and materials which have been sent to the site for incorporation in the permanent works, and 2. A reduction when the contract value of such plant and materials is included as part of the permanent works, under subparagraph A of subclause 14.3, which is application for interim payment certificates. If the lists referred to in subparagraphs B1 or C1 below are not included in the appendix to tender, this subclause shall not apply. This subclause starts with if this subclause applies. That means there is a situation where this subclause is not applicable. That situation is given in second paragraph. If the lists referred to in subparagraphs B1 or C1 below are not included in the appendix to tender, this subclause shall not apply. Therefore, if we check subparagraphs B1 or C1, you can see that The list should be there in the appendix to tender for both material on-site and material off-site. If those lists are not there in the appendix to tender, this subclause shall not apply. Further, the clause says, the engineer shall determine and certify each addition if the following conditions are satisfied. A. The contractor has 1. Kept satisfactory records, including the orders, receipts, costs, and use of plant and materials, which are available for inspection, and number 2. Submitted a statement of the cost of acquiring and delivering the plant and materials to the site, supported by satisfactory evidence. And either B. The relevant plant and materials 1. Are those listed in the appendix to tender for payment when shipped. 2. Have been shipped to the country en route to the site in accordance with the contract. And 3. Are described in a clean shipped bill of lading or other evidence of shipment which has been submitted to the engineer together with evidence of payment of freight and insurance, any other documents reasonably required, and a bank guarantee in a form and issued by an entity approved by the employer in amounts and currencies equal to the amount due under this subclause. This guarantee may be in a similar form to the form referred to in subclause 14.2, which is advance payment, and shall be valid until the plant and materials are properly stored on site and protected against loss, damage, or deterioration. In this part of the clause is given for the materials which are not on the site but off-site. And it is important to remember that these materials are not stored off-site. It says the listed in the appendix to tender, but these materials are also should be listed in the appendix to tender when shipped, and the payment has to be made when it's shipped, have been shipped to the country en route to the site. So it is covered the materials on the way to the country or on the way to the site. And contractor has to provide a bill of lading or other evidence of shipment, and the payment of freight and insurance for the material, because if the material is on site, you don't need a separate insurance. And a bank guarantee. This bank guarantee is to guarantee the employer that his material on site payment is secured in a form of money in case if something happens. And the validity of the guarantee should be the plant and materials are properly stored on site, because if until the materials are not stored on site as properly, it will not cover under the insurances on the site. Therefore, this bank guarantee has to make sure that the validity of the guarantee is covered until the materials are properly stored on the site. And these are the materials not stored on site but on the way to site. And it's further, the clause says, or C. The relevant plant and materials 1. Are those listed in the appendix to tender for payment when delivered to site, and 2. Have been delivered to and are properly stored on the site, are protected against loss, damage or deterioration, and appear to be in accordance with the contract. So this says all the relevant plant and materials. So the previous one is the materials not on the site, but this part covers the materials on the site. And it says those listed in appendix to tender. The plant and materials on the site are also should be listed in the appendix to tender for the payment. And it has to be delivered to site and properly stored on the site and protected. What is the meaning of appear to be in accordance with the contract? This covers that the materials should be according to the specification of the contract, and wherever needed, the contractor has to provide the test certificates to prove that the quality of the materials. And also, in accordance with the contract, we can use as the requirement for the contractor to follow the program to prevent the contractor ordering the materials prematurely. The last part of the clause says, the additional amount to be certified shall be the equivalent of 80% of the engineer's determination of the cost of the plant and materials, including delivery to site, taking account of the documents mentioned in this subclause and of the contract value of the plant and materials. The currencies for this additional amount shall be the same as those in which payment will become due when the contract value is included under subparagraph A of subclause 14.3, which is application for interim payment certificates. At the time, the payment certificate shall include the applicable reduction, which shall be equivalent to and in the same currencies and proportions as this additional amount for the relevant plant and materials. Unlike in FIDIC 87, FIDIC 99 has given the percentage as 80% of the engineer's determination of the cost. The engineer's determination is based on the documents mentioned in this subclause and the contract value of the plant and materials. You have to remember that in this, they don't say that is invoice value. And also it says the currencies for this additional amount shall be the same as those in which payment will become due when the contract value is included under subparagraph A of subclause 14.3. That means if the payment for the material has paid in different currencies than in the contract, then you have to convert the currency into the same currency as mentioned in the contract. Now let's see what FIDIC 2017 version says. In both FIDIC Red and Design and Build versions for 2017 has the same clause for the plant and materials. Subclause 14.5 Plant and materials intended for the works. If no plant and or materials are listed in the contract data for payment when shipped and or payment when delivered, this subclause shall not apply. So this is different wording from the FIDIC 99 but the same meaning as FIDIC 99. We should not confused with the wording of contract data because in FIDIC 2017 the appendix to tender in previous versions has changed to contract data. So here they are referring to the same place where the FIDIC 99 referred as appendix to tender. But the meaning is same. That means if the materials are not listed, then this subclause shall not apply. In this clause, I highlighted in purple color where the meaning is same but use different wording than the FIDIC 99. And the dark green color ones are the additional or the changes that FIDIC 2017 made from FIDIC 19 version. So the clause says the contractor shall include under subparagraph 5 of subclause 14.3, which is application for interim payment, an amount to be added for plant and materials which have been shipped or delivered as the case may be to the site for incorporation in the permanent works, and an amount to be deducted when the contract value of such plant and materials is included as part of the permanent works under subparagraph 1 of subclause 14.3, which is application for interim payment. If we check, they have added an amount to be added. The wording to be added after the word amount. If you remember in FIDIC 99, it says an amount for plant and materials. So the confusion of whether it's to be added or deducted, it is cleared in FIDIC 2017 version by adding this word to be added. And also in FIDIC 99 version it says materials which have been sent to the site. But here they have improved the clause and the clarity by including shipped or delivered, and as the case may be, to the site. And also they added an amount to be deducted instead of previous version a reduction when the contract value of such plant and material is included as part of the permanent works. Now it clearly says an amount to be deducted. So it is basically an improvement of the clause of FIDIC 1999. Then the clause says the engineer shall proceed under subclause 3.7 agreement or determination to agree or determine each amount to be added for plant and materials if the following conditions are fulfilled. And for the purpose of subclause 3.7.3 time limits, the date these conditions are fulfilled shall be the date of commencement of the time limit for agreement under subclause 3.7.3. The difference in this clause is there is a clause in this FIDIC 2017 for agreement or determination. If you remember in FIDIC 99, this clause says engineer shall determine the amount of cost. But in 2017, it has given a chance for the parties to agree. Therefore, the clause says agreement or determination to agree or determine each amount to be added for plant and materials. Further, the clause says A. The contractor has 1. Kept satisfactory records including the orders, receipts, costs, and use of plant and materials which are available for inspection by the engineer. The previous clause in 99 it says which are available for inspection. But by whom? That has given, even in FIDIC 2017, they have added the wordings by the engineer, and also they have given an additional subclause number 2, submitted evidence demonstrating that the plant and materials comply with the contract, which may include test certificates under subclause 7.4, testing by the contractor, and or compliance verification documentation under subclause 4.9.2, which is compliance verification system, to the engineer. This clause is an addition to FIDIC 99 so that the engineer can ask contractor to provide the test certificates so that employer knows that the materials which he is paying are in accordance with the contract. Number 3, submit a statement of cost of acquiring and shipping or delivering, as the case may be, the plant and materials to the site, supported by satisfactory evidence. So here they added the shipping to the previous clause. Then it says, and either B, the relevant plant and materials 1 are those listed in the contract data for payment when shipped, 2 have been shipped to the country en route to the site in accordance with the contract, and 3 are described in a clean shipped bill of lading or other evidence of shipment which has been submitted to the engineer together with evidence of payment of freight and insurance, any other documents reasonably required by the engineer. Here the change is the appendix to tender is changed to contract data, and they added to whom the documents should be provided. So it says any other documents reasonably required by the engineer. Then the clause says a written undertaking by the contractor that the contractor will deliver to the employer prior to submitting the next statement a bank guarantee in a form and issued by an entity to which the employer gives consent, but such consent shall not relieve the contractor from any obligation in the following provisions of this subparagraph, in amounts and currencies equal to the amounts due under this subclause. This guarantee shall be in a similar form to the form described in subclause 14.2.1, which is advance payment guarantee, and shall be valid until the plant and materials are properly stored on site and protected against loss, damage, or deterioration. In this clause, in this subclause as well, they have improved the clause by changing the clause to give an undertaking by the contractor that he will deliver the employer a bank guarantee. But he should make sure that he is providing that before submitting the next statement. In previous 99 version, it says contractor has to give a bank guarantee. But in here, the contractor can give an undertaking that he will submit the bank guarantee, because generally the taking a bank guarantee will take some time and they have to provide many details to the bank to issue the guarantee. So these materials on the way to the site has to be covered by a bank guarantee, and contractor can give an undertaking in the FIDIC 2017 version. And also the entity earlier in FIDIC 99 version, it says entity which approved by the employer, but here it says the employer gives consent, but such consent shall not relieve the contractor from any obligation in the following provisions of the subparagraph. And also, previous clause in 99 version, it says this guarantee may be in a form of advance payment guarantee. But here it says this guarantee shall be in a similar form to the form described in advance payment guarantee clause. And for the material on site, it says C. The relevant plant and materials are those listed in the contract data for payment when delivered to site, and 2. Have been delivered to and are properly stored on the site, are protected against loss, damage or deterioration, and appear to be in accordance with the contract. Here the only change is the word of appendix to tender is to contract data. Now you know what is the difference is there. And further the clause says, the amount so agreed or determined shall take account of the evidence and documents required under this subclause and of the contract value of the plant and materials. If subparagraph B above applies, the engineer shall have no obligation to certify any payment under this subclause until the employer has received the bank guarantee in accordance with subparagraph B3 above. The sum to be certified by the engineer in an interim payment certificate shall be the equivalent of 80% of this agreed or determined amount. The currencies for this certified sum shall be the same as those in which payment will become due when the contract value is included under subparagraph 1 of subclause 14.3 application for interim payment. At that time, the payment certificate shall include the applicable amount to be deducted, which shall be equivalent to and in the same currencies and proportions as this additional amount for the relevant plant and materials. Basically in here the change is that because of the agreed or determined wordings. So it starts with the amount so agreed or determined shall take account of the evidence and documents required under this subclause. Similar to FIDIC 99 in 2017, also the agreed or determined amount has to be decided based on the documents required under this subclause. But in 2017, the difference is it's agreed or determined rather than determined amount in FIDIC 99. And also subparagraph B above applies. That means the paragraph related to off-site material. The engineer shall have no obligation to certify any payment under this subclause until the employer has received the bank guarantee in accordance with subparagraph B3 above. So the bank guarantee is a must to pay for these materials off-site. Now let's see what FIDIC 4th edition, that means FIDIC 1987 version says. Subclause 60.1, it's under certificates and payments. Subclause 60.1c says the percentage of the invoice value of listed materials, all as stated in the appendix to tender and plant delivered by the contractor on the site for incorporation in the permanent works, but not incorporated in such works. In this clause, it says the percentage of the invoice value of listed material as stated in the appendix to tender. That means the list has to be in the appendix to tender and the percentage also should be in the appendix to tender. The amount has to calculate from the invoice value of the listed materials. Now let's see payments for material and material on-site payment in these three different standard form of contract. Different means not the different standard forms, but FIDIC standard form of contracts in different versions. FIDIC 87, FIDIC 99, FIDIC 2017, all these three required the materials to be listed. And FIDIC 87, there is a chance for you to decide the percentage, and the list is to be in appendix to tender, and the percentage also to be in the appendix to tender. FIDIC 99, it was given as 80% and the list should be in the appendix to tender. In FIDIC 2017, 80% is given and the list should be in the contract data. As I previously mentioned, contract data is similar to appendix to tender. In FIDIC 87, it says percentage of invoice value. In FIDIC 99, 80% of the engineer's determination. In FIDIC 2017, it says 80% of the agreed or determined amount. FIDIC 87, it says delivered to site. FIDIC 99, it says delivered to site. FIDIC 2017, it also says delivered to site. These are for material on site, that's why it says delivered to site. And FIDIC 99, it says properly stored. And FIDIC 87 doesn't say anything. FIDIC 2017 says properly stored. And FIDIC 87 does not say anything beyond the delivered to site. But FIDIC 99 and FIDIC 2017 both says protected and the satisfactory records and evidences and statement of cost to be submitted by the contractor, and the test certificates is added in FIDIC 2017. Therefore, we can see that in FIDIC 99 they have improved this clause, and also in FIDIC 2017 it has further improved to facilitate both the parties to pay material on site without any disputes. Now let's see why invoice value in FIDIC 87. Because the value contractor can claim based on their quotations or purchase orders, which will not be the final value of the material. Final value of the materials will be shown in invoice or receipts. But when they gave us, or when the contractor claimed with quotations, it will not show any discounts or the final value of the materials. That's why it has given as invoice value, because if you are approving the payment for material on site to facilitate the cash flow of the contractor, you should rely on the actual payment that contractor is going to make for the materials for their suppliers. Therefore, the invoice value is the most reliable cost for the materials. But what happens when the BOQ rate is lower than the 80% of the invoice value? This comes when the material prices has drastically changed from the tender date to the current date. Then the 80% of the invoice value of material itself will be showing a higher value than the BOQ rate. This has given an idea about how to deal in different situations in different contracts like lump sum and remeasurement contracts. In this situation, we have to be very careful about the contract clauses. I have seen even in APC interviews, people are asking the questions and the candidates are answering into this in by giving different views. But we have to remember one thing. The FIDIC is prepared for remeasure contracts and allowed price fluctuations. If you mentioned a percentage in the appendix to tender and the clause says you use that percentage and the invoice value to calculate the amount for the material on site, you have to follow that. We have to certify based on the invoice and the percentage listed in the appendix to tender. The confusion comes to the people when it comes to a lump sum fixed price contracts. In past, people used FIDIC 87 for lump sum fixed price contracts. When they used the standard form of contract which is prepared for remeasurement and price fluctuation allowed contract, what they do is they just delete the price fluctuation clause and they just delete the remeasurement clause. That's how they made the lump sum fixed price contracts. In such a situation, when their mind is set for the lump sum concept, when it comes to this kind of situation where the 80% of invoice value becomes more than the BOQ rate, then the confusion comes. But when you delete or change a clause from the standard form, you have to make sure that you change all the places where this clause interrelate with other clauses. When you delete price fluctuation clause, one of the clause you have to touch is this material on site payment. If you do not want to go beyond the BOQ rate, you have to change this in part 2 particular conditions of contract, saying that a percentage from the BOQ rate, that percentage in FIDIC 87, you can decide your own percentage. It could be 80 or it could be 60 or it could be 40. Whatever the percentage, you have to mention in appendix to tender and change the invoice value to BOQ rate. Otherwise, we have to certify the invoice value of the material into the percentage listed in the appendix to tender. And the other difference we saw in this FIDIC 99 and FIDIC 2017 is appendix to tender is referring as contract data in FIDIC 2017, but they both are referring to the same thing because only the name has changed from appendix to tender to contract data. Now let's see the payment for materials. Material off-site, and we will compare the FIDIC different versions, what they says for material off-site. As we discussed earlier, FIDIC 87 does not talk about material off-site. And FIDIC 99 and FIDIC 2017 is discussing about the material off-site, but the materials on transit to the site. So both FIDIC 99 and 2017 are almost similar, but for FIDIC 2017 has some additional improvements to the FIDIC 99. So we will see what are the changes. So in FIDIC 99, as we discussed earlier, it refers to Appendix to tender, and FIDIC 2017 it refers to contract data, which both are same. And FIDIC 99, it says engineer's determination, 80% of engineer's determination. And FIDIC 2017, it says 80% of agreed or determined amount. And the other difference in FIDIC 2017 is when FIDIC 99 asks about bank guarantee, FIDIC 2017 is asking about undertaking letter from the contractor that he will provide a bank guarantee before the next payment application. And the other additional subclause they added in FIDIC 2017 is the engineer can request for the test certificates to make sure that the materials are in accordance with the contract. Then if you check all these clauses, there are two lists of relevant plant and materials. First one, those for payment when they are shipped, and second one, those for payment when they are delivered to site. In FIDIC 87, it says invoice value, and FIDIC 99, it says engineer's determination. FIDIC 2017, it says agreement or determination. The percentage is decided on these values. The percentage decided means not the percentage amount. It is as an example. In FIDIC 87, it says 80% or the percentage listed. As in the appendix to tender, that percentage into invoice value is the value of material on site. And in FIDIC 99, 80% of engineer's determination. In FIDIC 2017, it's 80% of agreement or determination of the engineer. Who determines whether the contractor's records are satisfactory? This is not given in the clause exactly, but it is up to the engineer who's certifying the payment and to decide whether the records are satisfactory for him to certify the amount. Offsite materials for FIDIC 87 as not given, but if someone wants to pay that, he can follow FIDIC 2017 in Part 2 particular conditions of contract for FIDIC 87 version. And as I mentioned earlier, offsite materials in these FIDIC versions are not the materials stored offsite. If you want to have the provision for paying materials on site, materials off-site stored in another location, add in Part 2 conditions of contract and make sure that you add a clause for ownership of the materials. And also the materials stored in another location outside the site should be clearly and visibly marked at the storage. Therefore, in Part 2 particular conditions, if you add additional clauses for off-site storage, especially for FIDIC 87 version or even in the other versions, you have to make sure the following things are covered. Inspection at storage. The engineer or employer's representative should be able to go and inspect the materials at storage, and testing approval as required, so that engineer can make sure that the materials are in accordance with the contract. And the materials should be covered by insurance because it is not stored on site, therefore it is not covered under project insurances. Therefore, contractor has to provide an insurance which is covering the materials stored off-site. And it should be clearly and visibly marked at the storage. And also, contractor should provide vesting certificate, so there will not be a problem even if the contractor become insolvent. The ownership of the materials will come to the employer. And you can add the requirement of bond or a guarantee as necessary. Generally, the price escalation is calculated before the cost of materials on site, as this will naturally include for inflation, as any invoiced cost will be the cost current at the date of purchase of the materials. Therefore, the escalation will not double count. This is the end of the presentation, and today we discussed about material on-site payment and how the FIDIC different versions talk about that and what are the provisions that they have given. And if you like this video, please press the like button, and if you dislike, please give me the comments in the comment section so I can improve that in my next presentations. And also, if you think that the videos are helpful, please subscribe this video channel. And also, you can request for me to discuss about different topics which you think that it is important for you to have a discussion. And even if you are an APC candidate, you can ask me to talk about any areas that helpful for your APC interview, either how to prepare for the interview or how to write the case study or how critical analysis. So anything, just give me as a comment in below. And thank you very much for your time.